Japan eyes $7 trillion household savings pile for fresh bond demand. December 23, 2025. Japan is turning to its $7 trillion pool of household savings to bolster demand for government bonds, as higher yields revive retail interest in the Bank of Japan, BOJ, scales back its bond buying. Past efforts to attract individual investors, including mascots and gold coin incentives, had limited success. This year, however, rising yields have driven demand. Retail Japanese government bond, JGB, sales rose 30.5% in 2025 to 5.28 trillion yen, the highest level since 2007. Encouraged by the surge, the Finance Ministry faced calls from institutional investors in late November to further expand retail participation, according to meeting minutes. Broadening the JGB investor base has become increasingly important as Prime Minister Sanai Takaichi's reflationary agenda raises concerns about future government borrowing. The urgency intensified after the 10-year JGB yield broke above 2% for the first time in 26 years, following the BOJ's rate hike to a three-decade high and signals of further tightening. With the central bank reducing purchases and banks constrained by capital rules, households are seen as a key new source of demand. Yet retail JGBs have traditionally been hard to sell, offering lower yields than bonds sold to banks. Households currently hold less than 2% of Japan's 1.06 quadrillion yen in outstanding JGBs, while roughly half of household financial assets sit in cash or low-yield deposits. There is room for expansion among individuals, one participant said at the ministry meeting. Others urged product designs that encourage individual ownership, such as investment trusts tied to long-term bonds, given the instability of overseas investors. Rising yields are beginning to change the landscape. Daiwa Asset Management and Amuva Asset Management have launched investment trusts focused on 30-year JGBs, targeting retail investors for the first time. Amuva developed its product after the 30-year yield crossed 3%, a level it said was sufficient to beat inflation. The yield hit a record 3.445% this week. Retail investors have traditionally favored foreign bonds for higher returns, but those carry currency risk. Domestic high-yield JGB products offer an alternative without exchange rate exposure. NUCB Business School professor Nana Atsuki said improved product design could lift household ownership of JGBs to 5% to 6%, adding that wider bond ownership could foster public responsibility toward fiscal policy. The Finance Ministry plans to expand retail JGB eligibility from January 2027 to include non-profit organizations and unlisted companies and is collecting feedback on additional measures. Proposals from academics include allowing retail JGBs into NISA tax-free accounts and revising coupon-setting formulas that currently discount yields in exchange for principal protection. Analysts also point to Italy's success in boosting retail bond sales through loyalty incentives, though such measures raise questions about costs equivalent to tax breaks. By Reuters, story by Makiko Yamazaki and Junko Fujita, December 23, 2025.